Gambling on the stock market. Let's have a look. Good morning, everyone. Florian.Heise here, and welcome to another episode of HeiseSays. I hope you're having a good start to your Friday, and I encourage you all to grab your stein of coffee and let's sit down and have a look at this article from Yahoo Finance discussing, well, acceptable gambling or people gambling on the share market. We've heard about this more and more, particularly in the US, where, honestly, they were talking about people getting their stimulus checks, and those deposits, the exact amount, were heading straight into Robinhood. Now, if you're not familiar with Robinhood, it's an online trading platform, and one of, well, the example of the caliber of some of the Robinhood traders is shown here in this chart with Hertz. Hertz, which is pretty much dependent on tourism, completely tanked, went bankrupt, and look at all the Robinhood buyers. They just flooded in. The retail investors flooded in. So maybe they are a counter indicator. You do the opposite. Essentially, this was multimillionaires selling to average people, and a company that was about to go bankrupt. It's one way to learn a lesson. And part of life is learning things through stupidity. And I'm sure we've all done some stupid trades or made some stupid mistakes, or we've all done some, big wins. I remember, I think the first time I went with a friend to the casino, I think he just turned 18. He put some money in, won like $150 instantly, and then left. Good on him. Good on him. So, acceptable gambling. The share expert drops a truth bomb. So let me know in the comments, have you started investing? Are you interested in looking at the market? I most certainly am. And, I like to look a bit more, particularly about long-term investing and analyzing different shares or businesses. But then I see all these crazy things happening where fundamental analysis, profitability, the assets of the company, the sector it's in, it seems to be completely ignored. And you see people just dogpiling into things like that because money printer go brr. They see a lower price, $4, and they think it's a bargain. They think it has to go up. What goes down always goes up. Maybe because, well, it's probably the only hope they have of getting a slice of the insane money printing going on around the world. Maybe. So let's have a look. As countries around the world enter lockdown, many people use the extra time at home to start trading shares. So, you can see here in the corner of my video, there's even an advert from IG. There's a question. Since this share trading market is going up and people are using all these platforms, maybe they're the businesses to invest in. The businesses that run all these websites that run IG and the other ones that allow people to trade. Maybe they're investing in Robinhood. Could you invest in Robinhood using Robinhood? That's probably a good idea, actually. I'll look into that a bit further. However, StockSpot chief executive Chris Breese, who started trading when he was just 10 years old, is worried for them. It's great to see that a new generation is taking an interest in the share market, but it concerns me that most have fallen into the alluring trap of day trading, he wrote on his blog. Yeah, it seems exciting, doesn't it? Watching it go up and down. I remember when crypto was going crazy. And I was getting into that. I was mining. I had all my workstations in the office going day and night mining crypto. And, I'd get I think all this crypto, Kucoin is what I was mining. And I'd cobble together about $100 worth. And I put it into an ICO. And then it 10x. And I got $1,000, worth out of it. I didn't sell it quick enough. Well, actually, then I put it into Instanium. And this is where I learned the concept of buy the rumor, sell the news, because there was this rumor going around everyone. It was crypto, and I didn't realize how much BS goes around the place. And of course, it was shooting right up, and then boom, it crashed right down, and I didn't sell. I didn't take the profit. So it's part of the learning adventure. The learning adventure. So I was all ahead. I was thinking, wow, this is fantastic. This crypto is great. And then, of course, I got my power bill. Electricity in Australia is expensive, very expensive. Okay, you just compare it to some of the other countries in the world. I had one viewer, he was talking about, electricity, and he was talking about Germany, the prices there, and going how they're going up. Going, don't compare us to them. They're terrible. They've gone all sustainable, and they have to import everything from Russia. Compare us to America. Some of the states there where they've got, 10 cents a kilowatt or even less. Anyway, let's get back to this. Enough of my rambling crypto tales. So, as you can see, I have certainly experienced this from the side of the allowing your emotions to get the better of you and riding the watching the lines go up and down. I was even doing, swing trading. Trying to do basic TA and play the swings on it, which if there's a pattern happening, you can kind of do it with crypto. You can do it. You got to watch it. And that was the reason why I actually started my 6 screen setup here, so I'd have all the different charts. It was lots of fun. But day trading is a world into itself. I don't know if I could quite train myself up to do it. I think I'll be long term and more boring. What about you? Let me know. Let me know in the comments. Do we have any day traders watching here? So I fell into the same trap of confusing trading luck for skill during the 90s tech boom. I was a teenager at the time. Trading is different to investing. The former is a short-term attempt to buy cheap and then sell at a profit, while the later is to buy and hold for a long time. Day traders refer to those who trade real-time or almost real-time during business hours. But not even professionals can beat the market, so amateurs certainly have no chance. Let's be clear, research shows that almost all aspiring day traders lose money, he said. My understanding is that day traders, there'll just be a few really big wins throughout the whole year that will, carry them through, and they'll be just playing the market. It could be quite stressful, actually. It could be quite stressful, particularly in the market at the moment. Let's jump over here. We can see ASX is, at 6,051. The Nasdaq is at over 10,000 again. Over 10,000. I'll just bring up here shares. What's Tesla doing? It's just a smidge under $1,500. The Dow Jones is at 26,481. Remember, the U.S. economy, I'll have some other articles that people have sent me. The U.S. economy has shrunk by a third, or 30% decline. 9% down on GDP. I haven't read the article, but something insane. And the viewers said, history in the making. Look at that. Look at the Nasdaq. So, there have been numerous studies that show how badly traders actually perform. The results in the US, Taiwan, and even Brazil all show that between 80 to 97% of day traders lose money. Share trading is socially acceptable gambling. Now, isn't gambling socially acceptable? Pretty much. I guess, in Australian culture, it is. I guess the pokies. It's very depressing. It's very depressing if you go to a pub for a lunch and you see these people going there and just putting their money in the pokies. I guess it's a bit of fun and they enjoy it, but it gets really depressing where, some people that's their only social outlet, going there, putting money in a machine, hoping to win, gambling away their last bit of money. The danger is now you also have, games that are, frankly, I'd say even more addictive. Some of them on your phone where people are using microtransactions so they don't even have a chance of winning anything back. Some of the whales on those things spend a fortune. I still remember when I was at the horse races and it was for Melbourne Cup and I was invited there and I went up to the window. I just wanted to, you don't go there. You go there to get drunk, network and enjoy yourself. And if you put some money on and win, great. I went up there to the counter. I was going to put 100 on something just for the hell of it. And I pull out my card and they go, no, sorry, you can't do that. You've got to use cash. There you go. So what's going to happen to the gambling business? They'll probably get exempt from cash bans anyway. But I was surprised that I couldn't even just whack it on the card. Had to use cash. And I can understand why with people so addicted. The simple fact is that no one, professional or novice, has a crystal ball to see where the market or any particular stock will go in the future. The studies show the more you trade, the worse you do. Less than 1% of day traders consistently beat the returns from a low-cost exchange-traded fund. So there you go. There's another option. It's just going in an ETF as an alternative. But it's not as exciting. It's not as fun watching it, go up and down, up and down. There's one gentleman I followed on YouTube, and his whole shtick was trading the news, looking at what was happening and the opening of the NASDAQ or the opening of the New York Stock Exchange, and just trading particular stocks like momentum trading, the quick news, and in and out, in and out, in and out. You know, that's can lose you a lot. Can use it a lot. That lose you a lot there. He was using leverage to do it. And of course now he's doing courses. You'll see all these people. What they do is they'll do a course or something like this, and they'll start pushing that. Even what's that Gold Coast guy who pushes Amazon? You see him in all the ads all the time. And we went to an event they ran. It was the Gold Coast guy, Adam something, and you can see how terrible I am with names. That I see his ads like every 5 minutes, and I've just completely blocked it out. And a few other of these spruikers. And it was interesting, just all the products they were selling you and pushing you. And but he does his training courses. And my brother-in-law, one of his friends, did that course and made good money selling Amazon products. But he also shifted to the training course. You've got to think about it. It's to do with the moat. The moat. If you're doing the Amazon drop shipping, that's a very easy moat to overcome. Anyone can do it. And the risk is, once the English skills of your suppliers get to a certain level, then they can just provide the exact same product for you at a reduced cost. They can undercut you. They can steal all your IP and run away with it. What are you going to be able to do? What are you going to be able to do? So that's why they shift into this other model. So I guess they have two streams. It makes a lot of sense. It makes a lot of sense. Anyway, back to this. So, and the share trading apps know it. Though they mightn't know it, for most people who try, share trading is just a socially acceptable form of gambling. The various apps offering trading to newbies know this and have built platforms that are as addictive as slot machines in orchestrating your slow release of dopamine through their flashing lights, sounds, charts, and updating profit numbers. Professionals sell when amateurs buy. And I'll just bring up this Robinhood chart. This is my favorite one at the moment. Right here, we can see. I mean, are you in the market now, guys? Let us know. Are you buying or are you just holding back? I'm tempted to get in to look at some options, some businesses in silver and gold, but I'm not going to rush. I'm going to take my time. I might do a video series looking at all, the different businesses and try and pull them apart, and let's see what my pathetic attempts at analysis of it to put it on the table, so then I can get criticism from the YouTube global audience and learn from that. I mean, that's a great way, frankly. It's a great way of learning new things. One of the advantages of doing this, talking about YouTube vlogging, responding to articles, looking at the news, trying to understand what's going on in this crazy clown world is, you learn a lot along the way. And you meet some interesting people, that's for sure. So let's have a look. Share markets have seen much turbulence this year. That is an understatement. The volatility of their market is insane. Australian and US markets were at all-time highs in late February before they crashed more than 30% as the pandemic restrictions came in. Then since the trough in late March, markets have recovered stunningly, now almost recouping all their losses. Well, not in Australia. Not in Australia, guys. Sure, the US. I mean, look at that. That's insane. That is insane. Dow Jones hasn't. I mean, we're still 1,000 off. 1,000 off. And here's the question. Is this going to just be a dead cat bounce? Are we going to head back down again? But this rally has experts anxious because it's been driven by retail investors, everyday folks, not big financial institutions. So people sitting at home bored. In fact, a joint UNSW, University of New South Wales and University of Melbourne analysis has shown retail traders bought more stock in recent months than the professionals have sold. That's interesting. I think I might steal this chart to incorporate here. Look at that, guys. Look at that. Between March 23rd, when the stock market started rising, and May 2nd, retail investors were net buyers of $3.57 billion, wrote UNSW professor Carol Comerton Ford and University of Melbourne senior lecturer Zhu Zong. At the same time, the professional institutional investors, including super funds, were net sellers of 3.27 billion. Well, could that be because of could that be because of super withdrawals? People were getting their 10 grand out, and then they were buying shares back out of their super fund. Or buying gold or silver, as some people, or buying new cars, or paying off debt, or getting plastic surgery, boob jobs. Investing in the future. So, this is a complete reversal of simpler times pre-pandemic, when big institutions had much more clout in the market than mum and dad investors. So amateurs are buying high-risk shares. Not only is retail trading activity at an all-time high, but the average Joe is buying up high-risk shares for fatter profits or fatter losses, rather than the safer blue-chip companies. Our analysis shows retail investors were net buyers not of large-cap companies such as BHP and Combank, but highly volatile stocks such as AMP and Webjet, highly leveraged stocks such as Domino Pizza and Seek, and stocks whose prices were falling prior to the lockdown such as Maya and Flight Centre. In contrast, institutional investors were net sellers of all these stocks. But you can see why you'd go into Domino's. You'd see why. So why are retail investors behaving so wildly? Compton and Zong can only speculate, but they suspect an element of gambling for entertainment rather than serious investing is at play. Well, that's a good point. The casinos were shut, weren't they? The casinos were shut. And how many people want to get their flutter, want to put on and win? It may be due to people looking for entertainment in the absence of their usual leisure activities. This has been dubbed the boredom markets hypothesis. It might also just be another form of gambling, taking a punt in the absence of sports betting opportunities. Like Brycey, the two academics also fear recent gains cannot be sustained and will expose many novice traders to massive losses. See, this is the thing. You want to hope people aren't going in leveraged without a stop loss. Or we're going to see these articles appearing, in a couple of months' time. I lost my house, which is already in negative equity because I didn't put a stop loss on something and the market crashed. I think we will, sadly. Many listed companies have withdrawn or suspended their earning guidance that you should provide to the stock exchange, which is key information for investors, they wrote. We caution awareness of the risks in hoping for the best. Well, yeah, it's emotionally based trading. This shows you right here. So, what are you doing, guys? Are you in the market right now? Or are you holding back and watching? Are you looking at opportunities to pounce? Or are you waiting till your ounce of gold can buy you one share or equal to one purchase of the equivalent of the ASX 200? 6,000? Yeah, why not? Why not? Let us know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. Thank you all for watching. If you're a fan and want to support the content I create, there are a few ways you can. Simply interacting with the channel is a great way to support the channel's growth. Commenting, sharing the videos, it helps a lot. You can also support us financially by joining the channel on YouTube or Patreon, using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin, buying our merch from HeiseSays, using Gold Pass from the Perth Mint, or supporting us via PayPal. And hopefully I'll get my camera fixed one day. I've got it attached to a microphone stand that I'm working between my screens here so I can actually look at the camera without it having to be above. But unfortunately it starts floating down occasionally. I need to tighten it up a bit. We'll get there. We'll get there. You gotta jerry rig things. No point wasting money buying somewhere proper where you can, jerry rig something together. It's the Australian way. But anyway, guys, let me know how you're going. Have a great day, and I'll see you next time.